Welcome to Illuminati Silver. We tell the truth about silver. Today is Saturday, the 28th of September 2019, and we're providing our gold and silver weekly update for the week ending the 27th of September. We also wish to draw to your attention a video we published a little over 2 weeks ago entitled Why $1,450 Gold and $17.50 Silver Should Be Expected Soon. With silver having hit below $1,750 twice since and gold resting just below $1,500, in that video we highlight a number of reasons for this fallback and recommend you listen to it, and we have included a link in the description box below. But as a reminder, we quoted, "It really does appear that gold is struggling with the $1,500 level and silver with the $18 level, as forays into those territories have resulted in relatively quick reversals. This is why we believe that silver could once again fall back below $1,750 and soon, and gold move closer towards $1,450, though we are still a little more bullish gold than silver at this point, especially if there is going to be a global slowdown worse than anticipated, as this will adversely affect the industrial use of silver." Unquote. So meanwhile, let's get back to our weekly update and investigate. Gold fell $20 last week, from $1,517 to $1,497, having hit a high of $1,535 and a low of $1,487. In sterling terms, gold finished the week at £1,217. That's up £1. And in euros, it closed at €1,368. That's down €7. Silver fell 45 cents, from $17.99 to $17.55, having hit a high of $18.74 and a low of $17.30. In sterling terms, it closed at £14.27. That's down 16 pence. And in euros, it closed at €16.04. That's down 0.27 euros. The gold to silver ratio rose from 84.3 to 1 to 85.3 to 1. The Dow Jones closed on Friday at 26,820, down 70 points on the day and down 399 points on the week. And the Nasdaq closed at 7,939, down 91 points on the day and down 178 points on the week. And the S&P 500 closed at 2,961, down 15 points on the day and down 31 points on the week. So all equity markets down. Brent crude closed at $61.91 and WTI crude closed at $55.91. The dollar index, and this is noteworthy, the dollar index stands at 99.11. That's up 0.60 on the week. Now, last week, our assessment and forecast read, quote, "Going forward this coming week, we are likely to see some oscillation in both gold and silver prices. We are writing this early on Saturday in the knowledge that more information concerning the China trade talks and the US sending troops to Saudi Arabia is likely to be made public, and this will have a bearing as to what will happen next week. Our initial calculations are that prices may indeed firm a little until more facts are revealed, and providing the China trade talks are still resuming and the Iran-Saudi conflict does not boil over, we will stand by our predictions that precious metal prices should, short-term, decline." And that's really on the back of what we said the week before, talking about interest rate cuts, and we said, quote, "If it's a 0 cut or 0.25%, we can expect to see a further weakening in gold and silver prices, perhaps heading towards $14.50 for gold and $17 for silver. This is, of course, totally discounting any unforeseen geopolitical event which may arise in the interim, unquote. Well, early last week, we did indeed see some oscillation, but mainly to the upside initially, peaking on Wednesday, then a rapid descent to $1,502, a slight recovery on Thursday, and then a fallback again on Friday, but recovering a little towards the end, resulting in an overall weekly decline of 1.34%. Now, the relative strength of the US dollar, with the dollar index hitting a 2-year high on Thursday, with yields outpacing those in Europe and Japan, had much to do with gold's descent. Technically speaking, Friday, we basically witnessed a dead cat bounce, with support at the 50-day moving average of $1,491 and resistance at the weekly high of $1,535. Short-term momentum is negative, and the MACD appears to suggest some consolidation. Now, some analysts are claiming that gold prices will be volatile ahead of Thanksgiving, as the US funding bill awaits presidential signature in order for government to run through November the 21st. Also, we have to consider the fact that the White House suggested reducing investments into China, with Chinese companies potentially being delisted from US exchanges as part of the trade war retaliation, thereby causing gold to recover a little due to the uncertainty. Now, we pointed out last week that Friday was an important day to watch for economic data, and so it appeared to be the case. We saw positive durable good order figures of plus 0.2% for August, compared with expectations of minus 0.7%. Consumer spending was down to 0.1%, compared with an envisaged 0.3%, but core inflation remained steady at 0.1%. The Consumer Sentiment Index for September was up to 93.2, compared with 92 the previous month. And all of these factors had a bearing on the dollar and therefore precious metal prices. Silver fared less well as gold, ending the week down almost 2.5%, and the gold to silver ratio rising by a point. Similarly to gold, it rose at the start of the week, peaked Tuesday, fell back, and returned close to that peak on Wednesday, only to fall lower late Wednesday afternoon and continued the descent Friday, with a slight recovery towards the end of the day. Having almost reached the 50-day moving average level, analysts are asking whether it will hold here or quite possibly fall back to the 50% Fibonacci retracement level, which stands a little below $17. Frankly, opinion is split, especially as there are a number of potential support levels between $17.50 and $17. Now, yesterday we published a podcast video entitled, "Could Lower China Growth Rates Lead to Lower Silver Prices?", where we highlighted that China may indeed struggle to reach 6% growth this year, and that could have an impact on the demand for silver for industrial purposes. We also published a video entitled, "Should You Buy Gold and Sell Silver and Have Their Prices Already Peaked?", where Peter Borish of Quad Group argues that the catch-up with gold has already been reached at the end of the cycle, which he claims was 2 weeks ago, and that now silver will lag gold. His theory is interesting, though very contrarian. Again worth viewing, and we place a link to both of these in the description box below. So let's take a look at the economic data which may affect gold and silver prices this coming week. Well, on Tuesday, we have the Market Manufacturing PMI for September, the ISM Manufacturing Index for September, and Motor Vehicle Sales for September. On Wednesday, we have ADP Employment for September, and on Thursday, Market Services PMI and ISM Non-Manufacturing Index, both for September, and factory orders for August. On Friday, the most important day, non-farm payrolls for September, the unemployment rate, average hourly earnings, and the foreign trade deficit for August. Now, this is a fair chunk of data, most of which can have an influence on the US dollar and gold and silver prices. The manufacturing PMIs will give an indication as to whether the economy is in good or a bad state, and whether it's better or worse than anticipated. The ADP employment figures on Wednesday may give an indication of how good or bad the non-farm payrolls will be on Friday, which last month were very disappointing to the market at 130,000 new jobs. We suspect they may be higher this time, and if so, that will not be that good for gold and silver prices. However, if they are lower than 130,000, this would suggest the economy is beginning to fail, and therefore the prospect of more immediate rate cuts become a distinct possibility. On the US-China trade war front, we have to be concerned about the US threat to delist Chinese companies on the US exchanges, as this may result in further and bitter retaliation from the Chinese. We also have to be concerned about Congress's decision to begin impeachment inquiries into President Trump, and they have already subpoenaed Mike Pompeo, who will potentially create a constitutional crisis if he attends to obey that subpoena. Ukraine's former Foreign Minister Pavlo Klimkin denies a Ukraine prosecutor was sacked over a probe into the ex-US Vice President's son. Mr. Klimkin told the BBC that the prosecutor was sacked for corruption. A number of Western bodies, including the EU, had pushed for the prosecutor Viktor Shokin to be sacked, he said, thereby somewhat blowing a hole in President Trump's assertion that there is skullduggery going on there with Biden and his son. None of that particularly helps the political environment. So going forward this coming week, we will see some rapid movement in both gold and silver prices, oscillation as we call it, and the economic and geopolitical data will of course influence those prices. We still hold, however, that we can see gold falling back to 1450, and silver has already reached that 1750 level, and we contend that it will go lower and attempt to reach the $17 level. Now that said, and we have to add this caveat, because we are in constantly changing circumstances, and to do so would be negligent of us. China and Iran can both derail the lowering of prices, and so too can poor economic data, which, if it is poor, will put a floor underneath gold and silver, at least until the next Fed meeting in October. So our bias at the moment is still generally down, but we fully accept there are certain interventions that could occur next week that could change the direction for gold and silver. But we are not overly optimistic. Now, meanwhile, have a most pleasant weekend and prosperous week ahead. And if you haven't already done so, please subscribe to this channel and click the bell sign, and kindly pop over to illuminatisilver.com and sign up as a free or paying member. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners. Glory, glory.